Hello and welcome to this Moneycontrol live stream markets with me Yatin Mota. When you talk about the closing show here, clearly the RBI rate cut and the mega rate cut and the CRR cut clearly helping the Indian stock market zoom in trade today. In fact, the Nifty is now closing above that 25,000 mark, gaining by nearly 250 points. Obviously, the star performer of today was the Nifty Bank, which has surged nearly more than 1,000 points intraday, gaining by nearly 800 points on close, with the levels of the Nifty Bank close to 56,600 odd. Sensex also making a move of nearly 750 points, cheering the rate cut announcement by the RBI governor, and so did the mid and small cap indices, gaining by nearly more than 1% or so. The advance decline ratio on the markets was almost 3:2, so 3 advances for 2 declines. On a Friday evening, clearly the markets have cheered the entire RBI commentary as well as the rate cut decision. Now, if you talk about the sector performance today, we clearly have the Nifty real estate index gaining by nearly 5% in trade today and almost 10% for the week. Nifty metal, financial services, PSU banks, private banks clearly gaining big time in trade today. Talking about the market here, in the financials, especially the NBFC stocks, we have Shriram Finance gaining by nearly 5.5%, closing above that 690 mark. Bajaj Finance gaining by 5%. JSW Steel, Axis Bank and Maruti were the other stocks which clearly topped the charts on the Nifty. However, stocks like BEL, Bharti Airtel, Tata Steel and Sun Pharma saw some profit taking. Overall, it was not a good day for defensive stocks from the IT as well as from the pharma pack. Today joining us in the conversation is Nilesh from Centrum. Nilesh, thank you so much for speaking to Moneycontrol and taking out your time. Clearly today's RBI policy was a superb one, wherein the RBI governor not only cut the rates by 50 basis points, he also systematically announced the CRR cut by nearly 1 percentage points, obviously in phases which will probably get nearly 2.5 lakh crores in liquidity. So keeping in mind today's RBI policy and today's move, do you think banks will still outperform, and what is the view on Nifty at the level of 25,000?
Very good afternoon to you, Yatin. Well, absolutely. Today, RBI in fact gave a big surprise to the market, and the markets have reacted strongly on a positive side, specifically Bank Nifty, where we have seen a much awaited breakout today. So looking at the the liquidity that has pumped in after RBI's policy today, that will be a supportive for the banking space and also the rate sensitive sectors like realty, NBFC and also banking. So looking at the structure of the Bank Nifty now, I think there will be a follow-up move on the upside from here. Looking at the breakout that we have seen today, the Bank Nifty hit a new record high as well. So the target on the upside comes around 57,200 followed by 57,500. These are the spot levels. We are expecting another 500 to 700 point move on the upside. The support now which has shifted higher at 56,000, there's the psychological support, as well as on derivative front we have seen a fresh put writing at 56,000 put strike. So looks like the base has shifted at 56,000. As long as it trades above the same, we can expect a follow-up move to continue on the upside. So the strategy should be buy and decline. If at all you see any meaningful dip on the back of profit taking, that should be used as a buying opportunity. Now coming to Nifty, yes, in the Nifty as well, we have seen a good breakout about 25,000. It has ended above 25,000. So looking at the overall setup, we are likely to witness another round of short covering because a lot of call writers are still active at 25,000 strike, and not only long term but also short term moving averages have also been taken off in the Nifty index. So 21 DMA, which is now placed at 24,500, 24,700 followed by 24,600. These are the multiple support. A breakout above 2,500 will be considered as a short term another bottom for the Nifty, and the target would be somewhere around 25,300 to 25,500. Now another positive development today we have seen is continuous decline in the volatility index India Weeks. It has fallen for the 4th consecutive sessions now. It is trading below 15 levels, so that is giving more comfort to the bulls. Across the board kind of buying that we have seen today, the broader markets have also joined the rally. So looking at the overall setup, I think there should be a follow-up move in the coming week.
Okay, a follow-up move in the coming weeks, and apart from banks and the benchmark indices, real estate is one pack which has done well, Nilesh. Now, let me talk first about the CLSA report on real estate today, in which they are expecting an additional 50 basis points kind of rate cut in the next 12 months or so. Obviously, the balance of FY26 could see rate cuts depending on how things are transmitted. Obviously, RBI has changed their stance from accommodative to neutral, and now when it comes to CLSA, they believe that Sobha Developers, Prestige, and Godrej are the top picks when it comes to the real estate space. They have upgraded the stock of Sobha to hold, from the underperform rating earlier, and DLF and Phoenix Mills are the other stocks which they like. Obviously, if you talk about the real estate pack, stocks like Lodha Developers, DLF, Oberoi Realty were up anywhere between 5 to 7% in trade. Nilesh, I would like your view on real estate stocks. When it comes to DLF or probably the likes of Sobha or Oberoi or for that matter Lodha, the future and option segment is indicating a long build up. But do you think after 10% rally at the index level this week, there are more chances of a rally from here on, or one should book profits at the current levels in real estate stocks?
See, I think first of all, Nifty Realty Pack, if you look at Nifty Realty Index, which is currently at 1039 odd levels, so we are expecting a follow-up move towards 1100. So this is a little bit positional view we are taking on realty space. We have, if you just pull up last 1 year chart, you can see from the levels of almost 1150 where we have seen a triple top kind of pattern on the daily time frame chart. So from here we are expecting another leg on the upside towards 1100. So that's the next level to watch out for. So structure is still positive, but for fresh entry is not advisable to chase at high levels where we have seen already a spurt of 10% in the realty index. So the risk and reward is not favorable. Better to wait for some meaningful dip that can be bought into. Now coming to stock specific action within this space, Prestige is something that is our preferred bet within this space. So Prestige looks strong for further up move towards 1750 to 1770 on the upside, and it should be bought in a staggered manner, keeping a stop loss below 1640. Apart from that, DLF would be our second preferred bet, where we are expecting a follow-up move towards 910 to 930, and the stop loss should be placed below 850. And lastly, Oberoi Realty will be our third preferred bet within this space. We have seen a good rounding bottom formation breakout in this particular counter. So Oberoi Realty looks positive for 1950 to 1980 levels on the upside. 1170 should be the stop loss.
Okay, so that's the view coming in on real estate stocks. And as I said earlier, DLF clearly one of the top gaining counters in trade today, almost 7% higher for that particular stock. Also talking about Reliance Industries, and we have a couple of brokerages which have been bullish on the counter, and today also Reliance Industries has provided some support to the markets on an overall basis. Now Jefferies has come out with a report on Reliance Industries in which they have been quite bullish on the counter. In fact, if you look at Reliance Industries, we have Jefferies, which has put a target price of nearly 1650 on the counter. They believe that FY26 would be a good growth year, especially with the kind of new store additions that we have seen in the retail business. Also, geo tariffs could see an upside, and O2C business also could see some recovery in the overall business. Obviously, a standard disclaimer that the management as well as the entire control of Network 18, of which Moneycontrol is a part, vests in Reliance Industries. But Nilesh, talking about Reliance Industries or probably frontline stocks like SBI, Infosys, TCS, apart from banking, which are the counters do you think which could provide leadership to the market from here on? At 25,000 Nifty, banks obviously have a role to play since they have a very high weight in the Nifty. But overall, apart from the banking stocks, which are the other frontline stocks that you like, particularly your view on Reliance Industries?
Right, I think first of all, Reliance Industries, if you just pull up last 1 year chart, you can see the counter has witnessed a lot of consolidation with negative bias. But now recently in last couple of weeks, if you see the stock has started picking up the momentum. Looking at the overall setup, if at all it breaks above 1460, which the chances are very high that it will break 1460 levels on the upside. Then the counter is likely to inch closer to 1550 to 1600. So structure wise looks positive, can be accumulated at current level and on declines. The positional target comes around 1550 to 1600. So it should be bought from a positional perspective, keeping a stop loss below 1380. So Reliance looks positive. Now coming to sectorial view, as far as large caps are concerned, the see from here, if you want to see Nifty moving towards 25,500, the sector that should participate should be IT, metals. Metals have already shown some bit of strength today, but the IT and auto should provide more support to the Nifty. So first of all, coming to IT space, if you pull up Nifty IT index chart, this particular index is witnessing consolidation in the range of 36,500 to 38,000. So that's the broader 1,500 point trading range for this particular index. If it breaks above 38,000, then the next target would be 38,500 to 39,000. So IT will be in focus. As of now, there are no clear trend as of now in the IT space. But yes, if it breaks above 38,000, then we are likely to witness momentum coming back in the Nifty IT space. Now coming to Nifty auto space, where we have seen similar sort of a consolidation in the Nifty IT pack, but a positive development was seen today. Rate cut is also supportive for the auto space as well. No, Nifty Auto Index has given a breakout above is 200-day as well as 21-day moving average today. So watch out for Nifty Auto space. We are expecting a momentum to continue towards 24,000 to 24,400, and within this space, counters like Mahindra and Mahindra, that is our preferred bet, and we are expecting this stock to move towards 3,200 to 3,300 on the upside with a stop loss below 3,000. Mahindra and Mahindra is a buy. And apart from that, some momentum can be seen in the stocks like Tata Motors as well, although it has been one of the underperformer. But yes, from here, the risk and reward looks positive for a pullback towards 750 to 770 with a stop loss below 685. Tata Motors can be played for a pullback.
Okay, so probably a 25 rupees kind of a stop loss in Tata Motors and probably 100 rupee upside, and similar is the case with Mahindra and Mahindra. So when it comes to autos, I think Mahindra and Mahindra as well as Tata Motors would remain as top picks. But Nilesh, talking about the mid and small cap markets, because most of our viewers also want to know that how will mid caps and small caps move. Today there was a big index level movement. However, the action in mid caps was not that far fetched. When it comes to the mid cap indices, the small cap indices, do you think select mid cap and small caps can do well for the month of June, particularly talking about a few mid caps in the defense space, or probably few construction names, few infra names? Your overall view on the PSU pack as well as on the defense stocks in the mid cap arena?
Broader markets as a whole, yes, we are quite bullish on this particular space. Nifty mid cap and small cap, both the indices have in fact outperformed in this week. Small cap was up close to 4% compared to the Nifty, which was up 1.25%. Whereas if you see Nifty mid cap index as well, it was up close to 3% in this week. So we have already seen a good outperformance in the broader markets. And looking at the overall setup in the June series, we are expecting a further momentum in the Nifty mid cap and small cap space. Mid cap, we are expecting a new record high. So as far as levels are concerned, 59,400, 59,600, these are the levels we are expecting in the Nifty mid cap space. And also Nifty small cap, yes, we are expecting a momentum to continue. So an outperformance is something that we are expecting in the broader markets, given the kind of structure that we are witnessing across mid cap and small cap defense names, be it Mazgaon Dock or Cochin Shipyard, BDL, in fact, GRSE. These are the stocks that are witnessing strong momentum, and we are expecting this strong momentum to continue. So this focus should be on the mid cap and small cap only, although we are also bullish on the benchmark indices as well, but an outperformance can be seen in the broader markets.
Absolutely, and we hope so. The next week or probably the next couple of weeks are great for mid cap and small cap trade. With this completely timed out on the show, Nilesh, thank you so much for speaking to Moneycontrol and taking out your time.
Thank you, Yatin.
Yeah, so that's the view coming in from Nilesh Jain. He's the head AVP of derivatives and technical research at Centrum Broking, clearly sounding out a bullish tone for Indian equities. But as I mentioned earlier, completely climbed out, and when it comes to the markets, clearly cheering the RBI rate cut. Obviously, you guys also chill over the weekend. Next week should be action packed. Let's see how banks as well as other consumption stocks react, because we also have the all important monsoon session shortly kicking out, and the government also working on how to recalibrate the GST rate. So that will be a big trigger for the markets ahead. Stay tuned to moneycontrol.com for all your business news updates. Thank you so much for watching.